match your trading expectations. Hi, it's Charlie giving you Wednesday's video. I hope you're very well. So this video is all about mindset, as so often is the case. Because the problem that many traders have, or that people get into trading, is their expectations. If I can actually use my mouse here, their expectations, there we go, are too high. They have too high an expectation. Now that might be that could come down to expectations of how much money they're going to make, or the return. So of their return, they might think they're going to make 1,000% in a month. So their expectations might be too high in that regard. Their expectations might also be too high as far as win rate. And this is a big one here, win rate. So we're going to focus on this one today because the problem that traders have is they go into every trade wanting to be right. And we all do. That's why we do our analysis, or we follow a given strategy and we have to execute, because we don't know which ones are going to be right, which ones aren't going to be. But we still want every trade to be a winner. Now, if you execute in the right way, then that's okay. Of course, we're not going to go into every trade expecting it to be a loser. But what we do need to do is to have a measured attitude towards our trading. Acceptance, if I can actually write this out. So accepting the fact that we aren't going to be right all of the time. So rather than going into every trade and then setting yourself up for disappointment, if you're thinking, right, this one's got to win, it's got to win, actually flip it upside down and just remind yourself, if you're following a mechanical strategy, or even if you're not. So let's say you've got a mechanical strategy that gives you for argument's sake, a 60% success rate. Let's just go with this for now. Remind yourself that means that 40% of the time you're going to be losing. Because if you can go into every trade thinking that way, it's not pessimistic. What it's doing is you're allowing your brain to accept the fact that you are going to be having losing trades. So for the next 100 trades you take, you're going to have 40 losers. So if your brain can start to expect that and accept that that's going to be the case, then when the losers come along, you don't get disappointed, frustrated, pessimistic, all of those emotions that then can lead on to bad things. Those emotions can lead on to revenge trading, over trading, fear, hesitation, all of those things that we don't want to do. So if we can accept that we are going to be having a given number of losers for every 100 trades on average, or every 1,000 trades, then it's like we're under promising and over delivering. If we do get into that next trade and it's a winner, well, great, that's a bonus. But then every time we have a reset, and we know that going into that trade, we only have, I say only, in this instance, a 60% probability of it succeeding. So why don't we focus on the fact that there's a 40% probability that it won't succeed? And if you think in that way, then when on those trades that don't succeed, you're more comfortable with that fact. So you then just shrug them off and you move on to the next trade. That's what this is all about. Acceptance in trading, accepting that we can't possibly be right all of the time. And also, if our expectations are too high, and then we do have losing trades, like I've already said, we feel that disappointment. So why don't we just remove those high expectations and actually turn it on its head, so that we can then deal with the losers when the losers come, and we can deal with them better, and then look at the big picture. So the big picture is what's important in trading, not the micro. The fact that the outcome of the next trade that we take, or the outcome of the next 3 trades or 5 trades that we take, whatever. That's the narrow picture. We want to be thinking about, well, how we're going to be getting on over the next 100 trades, 500 trades, 1,000 trades. That's the big picture. So, and if we can think in those terms, then we don't worry so much about all the what goes on this next trade and the trade after that. That is the way to trade. That's the way to approach your trading from a mindset perspective. So we limit, it's all about limiting those fluctuations otherwise that we might, those emotional fluctuations that we might otherwise have with regards to having winning trades or losing trades. We do not want that. What we want is minor fluctuations. We are human beings after all, but we want to have a very, very diminished, very small emotional response to our trades, whether they are losers or if they are winners. I see so many people get excited about winning trades, and you think you're just setting yourself up for disappointment when you have losers. So why even go down that path? Have lower expectations of, we're talking about these win rates here today, of your win rate of the next trade and the next trade outcome, and expect to say, well, if I've got a 60% success rate overall, then I have to expect that 40% of the time I'm going to be losing. And it's the same with whatever your overall percentage win rate is going to be. It puts you in a much better position emotionally to be able to carry on trading and taking that next trade and the next trade after that, and not worrying about your near-term performance, because that's irrelevant. It's the outcome of our overall performance over a much greater statistical number of trades, which is way more important than just what happens over the next 5 trades, 10 trades, even 20 trades. Hopefully that gives you some food for thought for this week. I shall see you at the weekend.